When looking at the current market prices of gold and silver, there is no other way to explain it than the word madness. Every morning, news headlines are plastered with record highs broken and unprecedented rally. We even hear news of a gold shortage crisis in gold exchanges in Gangnam, where they cannot sell because there is no inventory. This leads to a flood of fear-driven claims in the market. Arguments like paper gold and silver are finished now. Physical gold is the only asset that will protect my survival, and soon there will be a withdrawal crisis where banks cannot give out gold. Everyone, is that really the case? Gold and silver have long been synonymous with inflation hedging. When the value of currency fell, gold and silver acted as the ultimate store of value. In actual history, those who held gold bars during wars or economic crises were essentially securing safe assets. However, watching this frenzy has made me feel an even stronger sense of skepticism toward gold and silver investment. In this video today, I want to talk in great depth and at great length about why physical gold and silver investment holds a fundamental and massive contradiction, and the uncomfortable truth these assets will face in a future dominated by AI and robots. First, let us look at this coldly. Is the reason gold prices are rising right now really because there is a shortage of gold on Earth? Statistics do not show that gold mine production has plummeted, nor have people around the world suddenly started wearing 10 gold necklaces each. The core reason is one thing. It is the collapse of trust in paper assets. Most of the gold we trade is not physical. It is so-called paper gold, such as ETFs, futures, and various derivatives. The shocking fact is that some analyses suggest the contract size of paper silver traded in the market is dozens or even more than 100 times larger than the actual physical silver in existence. People have now started to doubt. If all investors in the world simultaneously demanded that their physical assets be handed over, would banks and asset managers be able to give all that gold? This anxiety created a preference for physical assets and became the engine pushing up prices. In other words, the current rally is not because the value of gold has increased, but evidence that the promise of the financial system we trusted is shaking. Let me add one of my thoughts here. The financial system is essentially like a Tower of Babel built on virtual credit. If a bank run occurs where everyone demands physical assets because this trust is broken, it will no longer be a world where the price of gold is what matters. This is because the entire financial system will be paralyzed and the social contract will be destroyed. In other words, you must keep in mind that the moment you get physical gold in your hand is the moment the safe market we once knew has already disappeared. But here, we must ask a much larger question. What will happen when the era of artificial intelligence and humanoid robots arrives? Traditionally, gold was a shelter from rising prices during inflation. However, AI technology explosively increases productivity. When labor costs disappear and goods and services overflow, an era of technological deflation where prices continue to fall may arrive. If so, will the role of gold and silver remain the same? Gold and silver are essentially scarce physical assets. In inflation, the value of gold and silver rises relatively because the value of currency falls. Conversely, in a deflationary situation, the value of currency may stabilize or even rise. In other words, the opportunity cost of holding gold becomes relatively larger, and the upward pressure on prices also decreases. In a world where AI and humanoids are responsible for almost all production, labor costs drop sharply, goods and services overflow, and prices continue to fall. In this environment, it is difficult to expect only capital gains from gold and silver. Furthermore, gold and silver have no dividends, no interest, and no rent. In that they are assets aimed only at capital gains, the investment structure is limited. In a world where robots produce everything cheaply, gold, which gives no cash flow, is highly likely to fall into the risk of becoming a useless heavy metal for investors. Let us compare the characteristics of each asset class along with gold and silver. Bank deposits. The advantages are principal protection and deposit interest. They are stable, but in high inflation, real returns can be negative. However, in a deflationary period, the real value of deposits goes up even if they just
There are
sit
capital
there. Gains and dividend income. You can obtain returns according to corporate growth and productivity increases. Especially in the AI era, stocks are about owning the wealth creation machine itself. Even in a deflationary era, the possibility of long-term growth through dividend income and corporate restructuring exists. Real estate investment, there are capital gains and rental income. Rent is a stable cash flow, and the possibility of capital gains also exists. However, in the AI era, there may be volatility due to changes in residential patterns. Physical gold and silver investment, the advantage is value preservation during inflation. However, the disadvantages are clear. There is no return structure other than capital gains, and storage and insurance costs continuously occur. During deflation, profitability weakens sharply. In summary, gold and silver have an insurance-like nature, but the decisive point is that they do not create cash flow in long-term investment. Investment in the AI era must be based on productivity, but gold is an asset alienated from that productivity. Now, let us ask a very important question here. When do you think physical gold and silver shine the most? Is it in a quiet, peaceful, and orderly society? Or is it in a situation where the financial system is shaking, trust in currency is hitting rock bottom, and people treat paper assets like trash? The answer is very clear. It is the latter. Physical gold and silver investment looks like a safe asset on the outside, but it actually lays down a very powerful premise. That monetary power will weaken or collapse. Because, in a society where currency works well, gold is just a raw material or an investment asset, and only when currency shakes does gold take on a real meaning as an alternative currency. In other words, the real stage for physical gold and silver is not a normal society. The fact that you expect gold prices to skyrocket actually implies a psychological contradiction, as if you want the civilized order we enjoy to be destroyed. Now, what kind of world will come if monetary power collapses? This is not an imagination, but a scene that has already been repeated many times in history. A crash in currency value, capital controls, frozen accounts, restricted cash withdrawals, and most fatally, the deterioration of public safety. A society where public power has weakened gradually becomes closer to a lawless zone. Here, we must ask a realistic question once again. Are physical gold and silver really safe in a lawless world? My answer, to be honest, is no. In a society where the protection of the law has disappeared, gold is not an asset but a target for looting. The moment your neighbor knows that you have gold bars, you become a target. Gold is a treasure only when the system is alive. If the system collapses, gold is just a heavy lump of metal and a target. It is much more dangerous to carry one gold bar than to have a few 10,001 bills in your wallet. How will you protect that heavy gold in a state where there is no police and no law to protect you? In a lawless state where real survival is at stake, there are other assets more powerful than gold. They are food, clean water, energy, and the weapons and organizational power to protect oneself. You cannot eat gold, and it cannot block bullets. Let us remember Executive Order 6102 of the United States in 1933. President Roosevelt strictly prohibited the private ownership of gold. Gold became illegal, and people were forced to choose: handing it over to the government, hiding it, or trading it on the black market. In a black market that does not receive the protection of the law, gold trading leads to fraud, extortion, and violence. The state never leaves the gold of individuals alone in a moment of crisis. When the law is alive, the state takes it away, and when the law is dead, robbers take it away. This is not a theory, but a historical pattern created by human greed. Also, look at the case of China. China's hoarding of gold is a national survival strategy, not an engine of growth. Since China has a high dependence on food and energy, it must throw away its gold to buy food and oil in a moment of crisis. It is a dangerous idea for an individual to believe in gold as a permanent store of value when even a nation sees it as a card to be sold. Let us turn our eyes to the future again. In a future where AI and robots replace most human labor, product production costs will plummet and deflationary pressure will intensify. Currency value will stabilize or rise, and the rise in gold and silver prices will be limited. On the other hand, stocks, real estate, and corporate stakes will absorb the returns according to the increase in productivity. A person who insists only on gold and silver investment cannot help but face a higher relative opportunity cost. Storage costs and management risks eat away at real returns, and the liquidity problem of non-cash assets, being difficult to divide and cumbersome to trade, becomes a fatal disadvantage in daily transactions. Do not forget that gold and silver are highly speculative in that you must only wait for the price to rise because there is no cash flow such as dividends, rent, or interest. I have looked at the flip side of physical gold and silver investment for a long time today. Let us summarize. Gold and silver can only be expected to have capital gains and have a strong insurance-like nature. On the other hand, bank deposits give stable returns, and stocks and real estate give cash flow reflecting productivity increases. Assuming deflation in the AI and humanoid era, a portfolio centered on gold and silver cannot help but be a relative weakness in long-term investment. Physical gold and silver investment looks like an asset for surviving when the world is ruined, but in reality, it holds a fatal contradiction. It only gains real value when the world must be ruined, but when the world is ruined, it becomes impossible to protect. That is why I think like this. Rather than feeling that the era of real assets has come while watching gold and silver rise, I see how much people are feeling anxious about the system. Physical gold and silver are closer to an index of distrust rather than an object of investment. Of course, there will certainly be advantages to physical investment in gold, but I hope you will sufficiently consider these structural points to note and risks I have mentioned and refer to them for your investment. It will be an individual's choice to keep it as an insurance-like nature as part of your asset portfolio, but I wonder if a more rational strategy would be to balance it with assets that can create future productivity and cash flow. What are your thoughts? Thank you for watching for a long time. Please share your valuable opinions in the comments. Subscribing and liking are a great help to the growth of the channel. I will come back with deeper insight next time. Thank you.